Warren Buffett is widely regarded as one of the most successful investors of all time, and his philosophy is grounded in a deep understanding of market psychology. One of his most famous quotes is "Be fearful when others are greedy and greedy when others are fearful." But what does this mean and how can we apply it in our investing decisions? At its core, this quote speaks to the importance of emotional control in investing. The stock market is highly driven by human emotion, fear and greed. When people are overly optimistic, prices often become inflated, creating bubbles. Conversely, when fear takes over, stocks can be undervalued and present buying opportunities. Buffett's message is clear: don't follow the crowd. When everyone else is buying because they believe the market will continue to rise, it's often a sign to be cautious. This is when the market is greedy and it can be risky to jump in. Instead, you should approach with caution and possibly wait for a better entry point. On the flip side, when panic sets in, when people are selling in fear, this is the time to look for opportunities. Fearful markets often lead to discounted stocks, and this is where Buffett advocates for being greedy. If you believe in long-term value of an asset, downturns can provide chances to buy at lower prices. Let's consider the 2008 financial crisis. Many investors panicked and stock prices plunged. Yet, this is when Buffett made some of his most profitable investments, buying shares in companies like Goldman Sachs and Bank of America at a fraction of their value. His philosophy of being greedy when others are fearful helped him seize opportunities when others were selling out of panic. Warren Buffett's quote is a reminder to think independently and avoid being swayed by the prevailing emotions in the market. By practicing patience and emotional discipline, we can make better investment choices. So, the next time the market seems overly optimistic or overly fearful, remember, it's time to either step back or seize the opportunity, depending on which way the crowd is moving. By following this mindset, we not only protect ourselves from market hype, but also position ourselves to take advantages of the opportunities that fear and greed create.